Japan is preparing to launch its first yen-backed stablecoin.
This comes as the Bank of Japan is expected to raise interest rates.
The Financial Services Agency may approve the stablecoin this fall.
Tokyo-based JPYC will manage the rollout of the new stablecoin.
Stablecoins are pegged to an external reference like the United States dollar or the yen.
They facilitate transactions while avoiding cryptocurrency volatility.
Monex Group is also considering launching a yen stablecoin.
They aim to use it for international remittances and settlements.
Bitcoin experienced an 8% decline in August, wiping out its summer rally.
This drop contrasts with Ether, which saw a 14% increase during the same period.
Bitcoin is now slightly below its Memorial Day price of $109,500.
Ether outperformed Bitcoin by a significant 2,200 basis points.
This difference is partly attributed to substantial capital inflows into Ether treasury companies and spot exchange-traded funds.
Data shows Ether ETFs saw $4 billion in inflows this month compared to $629 million for Bitcoin ETFs.
Historically, September has been a challenging month for Bitcoin, showing declines in 8 out of the past 12 years.
However, this historical data may not be fully representative due to Bitcoin's evolving status in the financial market.
XRP is showing bullish patterns.
Korean buyers are starting to accumulate the cryptocurrency.
This increased buying activity could push the price towards $5.
Some analysts believe this is a significant sign of renewed investor confidence.
Meanwhile, wealthy Bitcoin holders are reportedly spending their Bitcoin on luxury vacations.
This includes private jet flights, yacht cruises, and high-end hotels.
Some question if spending Bitcoin on these luxuries is a wise financial decision.
It remains to be seen if this trend will continue.
Crypto analyst Alex Kruger believes the market looks primed for a bullish reversal.
He stated that the current bearish state of most crypto charts suggests the panic selling may be nearing its end.
Kruger shared charts of Bitcoin and Ether, both showing declines below key trendlines.
He also highlighted Solana, which demonstrated comparative resilience.
Derivatives charts indicated traders have adopted heavily defensive positions.
Kruger noted significant long liquidations, particularly in recent trading sessions.
He observed that Bitcoin and Ether absorbed most of the selling pressure, while many altcoins held steadier.
This divergence, he suggested, could signal upcoming strength.
Web3 startups raised $9.6 billion in venture funding during the second quarter of 2025. The number of deals fell to multi-year lows according to Outlier Ventures. Web3 fundraising is evolving from hype-driven activity. Investors favor foundational infrastructure and proven teams over volume. The median deal size rose across every stage. The median Series A round grew to $17.6 million. River Financial Services reports individuals still own most Bitcoin.
Their August 25 research categorizes Bitcoin supply and market share.
River estimates individuals control about 66% of Bitcoin, 13.83 million coins.
This includes self-custodied wallets and individual exchange accounts.
Businesses hold about 6% of the supply, 1.3 million Bitcoin.
Exchange-traded funds and investment funds control about 8%, 1.63 million.
Governments hold about 1.5%, or 306,000 Bitcoin.
Lost Bitcoin accounts for roughly 8%, and early miners hold 5%.
River Financial Services says companies are absorbing Bitcoin at a rate much higher than its mining rate.
Their infographic shows businesses are absorbing about 1,755 Bitcoin per day.
This is compared to the approximately 450 Bitcoin mined daily.
River defines businesses broadly, including companies with Bitcoin treasuries and those holding Bitcoin on their balance sheets.
The 450 Bitcoin per day mining rate reflects the 2024 halving event.
This event reduced the block reward to 3.125 Bitcoin.
With blocks mined approximately every 10 minutes, this results in roughly 450 new Bitcoin daily.
River also notes significant inflows to funds and exchange-traded funds, totaling about 1,430 Bitcoin per day.
Arthur Hayes, co-founder of BitMEX and Maelstrom, believes Hyperliquid's HYPE token has significant upside potential.
Hayes, known for inventing the perpetual swap, invests in early-stage infrastructure projects at Maelstrom.
His recent blog post, backed by a Maelstrom valuation model, argues HYPE could rise 126 times.
Hyperliquid is a decentralized exchange operating fully on its own blockchain, unlike centralized exchanges like Coinbase or Binance.
Traders primarily use Hyperliquid for perpetual futures contracts.
HYPE, its native token, functions as both a governance tool and an economic stake.
Holders can vote, stake for rewards, and benefit from trading fees linked to the token value.
Essentially, Hyperliquid is the platform, and HYPE allows users to participate in its growth. A wave of crypto exchange-traded funds could hit United States markets this fall.
This could change how investors access digital assets.
Some see this as mainstream adoption, while others expect failures.
Many of the 90-plus crypto exchange-traded fund applications filed with the Securities and Exchange Commission will likely be approved.
Investors will ultimately decide which products are successful.
The exchange-traded fund market is driven by where investors put their money.
Demand for diverse investment options is already present.
Demand for spot products in crypto assets is likely underestimated. The Internal Revenue Service Digital Assets Office Chief, Trish Walker, has exited the agency.
This departure follows two other recent crypto official exits to the private sector.
The Treasury Department has not named a successor.
New tax policies will likely increase crypto filings.
These policies include the 1099-DA form for crypto brokers.
Millions of people may receive this form for the first time.
The IRS is facing a potential surge in crypto filings for the 2025 tax year.
This increase is partly due to prior taxpayer confusion on reporting requirements.
El Salvador has changed how it stores its Bitcoin reserves.
This change improves security now and prepares for future technological risks.
The country's Bitcoin reserve has been moved from one wallet to many.
Each wallet will hold no more than 500 Bitcoin.
This limits the potential damage if a wallet is compromised.
Officials say this follows industry practices and anticipates advances in quantum computing.
Quantum computers could one day break the cryptography that secures Bitcoin.
This also affects systems like banking, email, and online communications.
Austin Federa, formerly of the Solana Foundation, is launching 00, a protocol designed to improve blockchain communication and scaling. The mainnet launch is planned for September.
It prioritizes data speed between market event locations, similar to how Formula One optimized pit stops. However, 00 allows multiple independent contributors with their own fiber networks to create a high-performance mesh network.
Solana is being supported first because of its high transactions per second to node count ratio. 00 has broader applications beyond Solana and blockchain.
This helps subsidize validator costs on the testnet and encourages participation. With sufficient stake on 00, Solana can increase limits beyond public internet capabilities.
The internet itself, dominated by a few companies, is a centralizing force. Multiple contributors and the Public Internet act as safeguards against bad actors or outages. Pump, Fund's native token Pump has defied the broader crypto downturn this week.
It rose by 17% as the platform uses fees to buy back tokens.
These buybacks aim to support token holders.
They do this by reducing the circulating supply and absorbing selling pressure.
Pump is currently trading at $0.0035.
That is about 40% higher than a month ago.
However, it is still down 50% from its July debut.
Pump.fun earns fees on every token created through its service.
Strategy, formerly MicroStrategy, has innovated United States capital markets by issuing preferred stock under tickers STRK, STRF, STRD, and STRC. These
offerings raised approximately $5.6 billion year to date, representing 12% of all United States initial public offering issuance.
This highlights investor interest and Strategy's role as a major corporate representative for Bitcoin.
Performance varies across the preferreds, with STRF leading at a 31% return.
STRK follows at 19%, and STRC at 8%, while STRD lags with a negative 6% return.
This diversified financing allows Strategy to fund its Bitcoin treasury, currently holding 632,457 Bitcoin.
This cements Strategy as the world's largest corporate holder of Bitcoin.
Strategy's enterprise value relative to Bitcoin net asset value is currently 1.60.
Flare has secured another public company for its XRP decentralized finance framework. This makes Everything Blockchain Incorporated the second public company to do so, following Vivo Power International. Flare's system allows companies to convert XRP into FXRP and allocate it across various decentralized protocols. He added that Flare is changing that by enabling a yield framework for corporate treasuries. He added that Flare meets the necessary standards for public companies. Stellar's native token XLM fell from $0.39 to $0.36 between August 28 and August 29.
Market data shows over 41.89 million XLM changed hands as large holders reduced exposure.
Despite this, Stellar's network is approaching 10 million registered accounts.
Daily growth of 5,000 to 6,000 new corporate wallets is boosting this growth.
On August 29, XLM dropped 1.38% before institutional buyers re-entered the market.
The token recovered 1.27%, closing at $0.361 after touching $0.357.
A source close to Stellar said the turbulence was sentiment-driven.
The late session bounce suggests some large buyers saw the decline as a buying opportunity.